Hey everyone, Couch Investor here, back to another video for today. In today's video, let's talk about Salesforce. It does seem like, well, things just get worse every single day for the company. If it's not layoffs, then it's an executive leaving. If it's not an executive leaving, then there's something else around the company that is wrong, maybe earnings, maybe growth, etc., etc. So in this video, let's talk a bit about Salesforce, what has been happening with the company, what you can expect from the company, what the company expects to do in the coming years as well. We're going to discuss all of that in this video. Of course, we have to start with the announcement. So they plan to reduce the workforce by about 10%, mostly over the coming weeks, 10% between 7,000 to 8,000 people. Basically, why is that? Well, they write here, as our revenue accelerated through the pandemic, we hired too many people leading into this economic downturn we're now facing, and I take responsibility for that. Obviously, the CEO says that, and we've seen it with Meta as well. Mark Zuckerberg apologizing for just, well, maybe not seeing this coming, but to be honest, those are not the only companies. Every other big tech company, every other company in the market right now is laying off employees because they have overhired in the last couple of years. We've talked about that with Amazon, right? Q1 2020 until Q3 2022, they hired around 700,000 employees. I'll repeat that. 700,000 employees. They went from around 840,000 to over 1.5 million. So obviously, right now, with the current market situation, layoffs is just the go-to thing. Now, with regards to layoffs, apparently Benioff suggests more potential layoffs. He also said that about half of Salesforce account executives brought in more than 95% of deals. So maybe they can do the same amount of work with just less. There's this saying, less is more. Zuckerberg said it as well. They can do more with fewer people. And I think a lot of big tech companies can apply that and probably will apply that as well. Now, more recently, we also had another analyst note with regards to Salesforce. So a downgrade here to underperform from market perform at Bernstein. He also lowered his price target from $134 to $119. The analyst notes that Salesforce has been a controversial name for the last year as growth slowed and the company started to focus on margin. Management guided to hit $50 billion in revenue and operating margin of 25% plus for 2026. We're going to talk about that in just a bit. But pressure has increased for larger margin improvements while growth has continued to slow and the company has missed expectations. Comparing the valuation of Salesforce against peers, the analyst finds that Salesforce is overpriced as it has a similar growth rate to peers but lower margins and lower quality earnings. With a lot more pain ahead for Salesforce and numerous catalysts that may drive a lower multiple, he drops his rating to underperform. We're gonna have a look at that in just a second. Now, if you're enjoying this type of video, do hit the thumbs up button. I really appreciate that, and subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So let's have a look at Salesforce in the last couple of years. So yes, of course, revenue has been increasing over the years. In the last 12 months, they're around $30 billion. Now, even though the stock is down from 1 year ago 37%, it still has a forward PE of close to 27 times, which, to be honest, is quite high, especially with the current growth rates here. Now, it is still free cash flow positive, so that's fine. Return on equity has come down, so that's something to look out for if it goes into the negative territory. Not great. Gross profit margin has come down as well. And again, if we look at the PE to growth ratio, in the next 12 months, it's even more than the forward PE actually here, probably updated. So it's 28. Now, for those that don't remember, last quarter, this is basically what happened. So revenue grew 14% year over year to $7.84 billion. GAAP earnings per share of 21 cents. The current RPO, or remaining performance obligations, of $20.9 billion, that's up 11%, and then they returned $1.7 billion to shareholders. Remember, they authorized a $10 billion share repurchase program, which will average 30 to 40% free cash flow return. And as for the guidance that they gave us for Q4, they expect to grow 9% at the midpoint. And then for the full year, they expect to grow 17% year over year. When it comes to GAAP earnings per share, quarter over quarter, barely any growth. So let's see what happens there. Now, a big part of Salesforce and their strategy to grow has obviously been through acquisition. You might remember Slack, Tableau, and many, many others, as you can see here on the picture. Now, with Slack, of course, with the current market situation and current rumors, apparently the integration is not going as smoothly as they expected. So obviously this is seen as a negative thing. And of course, this impacts margins as well. Now, with regards to the long-term growth potential, long-term growth goals, they expect $50 billion in revenue by fiscal year 2026, 17% revenue CAGR, and then 25% or more non-GAAP operating margin, still those 10 billion share repurchases, 30 to 40% average free cash flow return that we've talked about before. Of course, setting those goals are nice, but if we see that in the short term nothing really changes meaningfully or, well, pushing the company into the direction towards those goals, well, the market will just not believe that you can achieve that. And that's probably exactly what's been happening right now with Salesforce. Of course, the current market situation does not help the company at all. Of course, those layoffs doesn't help as well, even though the market sees it as a positive because it is cost cutting. But when you are laying off a lot of employees, in the short term, it does, well, hit the company because they have to pay them 5 months or so of salary. So there is that. But there is even more bad news, which is executives leaving the company. So apparently the Chief Technology Officer of Security, Taher Al-Gamal, is leaving the company after 10 years. He's the second high-level cybersecurity official to leave Salesforce following Executive Vice President Mark Carter, who departed in November. And if some of you have been following the company or news related to the company, you know that, well, I'm going to go into the next one, which was co-CEO Brett Taylor. He put his notice, well, this was a while ago, saying he wanted to get back to his entrepreneurial roots. Now, Stuart Butterfield, the founder of Slack, which was acquired by Salesforce 2 years ago, is also leaving to spend more time with his family. Two other members of the company, Gavin Patterson and Mark Nelson, putting their resignation last month as well. And by last month, it was in November. Now, with regards to the co-CEO, so Brett Taylor leaving Salesforce, it's the second time in less than 3 years that Benioff has lost a co-CEO. Keith Block held the position for 18 months before leaving in 2020. Now, I don't know about you, but when so many executives are leaving Salesforce one after the other in a short period of time, when there are lots of layoffs, when growth is probably slowing down, well, something's going on there inside of Salesforce. Of course, this might be a lot of turbulent noise. I won't call it noise because those actually things that are happening, but maybe the same thing that we saw with Meta. Remember a couple of months ago, Meta, well, it's going out of business, Meta is dead, etc., etc. Well, since the lows there, the stock is up, over 50, 60% or so. Maybe the same thing can happen with Salesforce. Now, the big difference between Salesforce and Meta is that, well, Meta valuation-wise was much cheaper than Salesforce, and they have some growth drivers that, well, we would like to see, and we probably will see with Reels going into 2023. Well, not going into 2023 since we're already in 2023. I still have to adapt to that, but you get what I'm saying. And now, before we conclude this video, obviously everybody's favorite part of these videos lately, it's the graph. Now, the graph here does show us something, let's say, bullish-ish. So this is on the weekly chart. We can see here clearly that, well, in the last couple of weeks, we've seen some nice little green candles, even though we've had all the bad news that I just told you during this video. And what's even better is that, well, two big candles went over the 20 and the 50-day moving average. What else? RSI still okay, 47. And as you can see here, MACD has turned bullish. We're still under the zero, but it has turned bullish. And that's probably much better than what most were expecting if we're just looking at technical analysis here. Again, we've had some good news this week as well. CPI inflation is still high, but we can see that the trend is continuing on the way down. And so to conclude, I personally don't own Salesforce. I have no plans on owning Salesforce anytime soon. I'm sure it's a wonderful company, but things have to change very, very quickly for the market to have the confidence that, well, they can reach those fiscal year 2026 goals. Of course, right now we have so much noise surrounding the company, layoffs, executives leaving, growth is slowing down, etc. But if they can show the market, if they can execute nicely in 2023, then the market will probably believe that those goals are achievable and eventually the stock will do its thing. Although right now it's still not that cheap. But I would like to hear your thoughts down in the comments below about Salesforce, about the whole situation right now surrounding the company. Let me know down in the comments below. And if you enjoy this type of videos, leave it a thumbs up and subscribe if you have not. And I see you all in the next one. Bye bye.